Hello, fellow traders. Tis I, TheRumpledOne, coming to you Monday, April 26th. The year's 2021. Let's talk trading. See versus look for with Walmal. And one thing you need to know is these videos are for educational purposes only. Your results may differ from mine and from Walmal. Walmal, we've been talking about seeing versus look for a while, so I guess we need to present it to the boys and girls and non-binary traders out there.
Yeah, I think it'd be a good idea. I think what we need to do first off is just define what's the difference between look for and see. That may be a little bit confusing to some, but there is a difference. When you say that you're looking for, you're actually looking at the charts and you're looking at all your charts and you're looking for an opportunity to trade, and you're just looking and you're looking and looking, as opposed to seeing a trade. And that means you looked at the chart. But what you do is you just see the opportunity come across the chart. At least that's how I define it. How do you define it, sir?
Well, the difference to me is it's like a long time ago, probably back around 2008 or before, I posted a chart, no indicators, no horizontal lines, just a chart with candles, and I asked traders what did they see, and they started talking about resistance and trend and all this stuff. And I said, if you would have asked a kindergarten what they saw, they go, well, there's these colored rectangles. And so what happens is if you look for something, you're intentionally biased. So for example, if you're looking to buy, say, a new Ford Mustang, when you're driving down the highway, you are going to see every, Ford Mustang that drives down the road. But before you made that decision, you might not have noticed Ford Mustangs. Or if you were looking to buy a vet, you'd see vets and you wouldn't see Mustangs. So the difference is seeing is just observing without any inherent bias. Whereas if you look for, then it's almost like you've got an idea in your mind, and especially in trading, and so you want it to be proven by what's happening on the chart. So for example, what do you, so like when we're doing a Walmart trade, are you looking for something or are you seeing?
I'm most of the time I'm seeing. Of course, we all fall into that look for category, often enough, and there's nothing necessarily wrong with a bias at a particular moment in time. But what I'm doing is I'm seeing what's happening. It's the type of thing where, okay, I'm looking at the chart, I'm seeing what price is doing. If I'm coming across, like this hour, I believe we said that the Walmal lines were the 00 and the 90, if I recall correctly.
Right.
And so knowing that, well, all I have to do is look at the chart and see if I'm crossing those lines. Whereas looking for means I need to go and, look and see, okay, what's there? What am I looking for? Do I have a bias? Did I go and do this? Did I go and do that? Do I have all these other things that are playing into it? And sometimes that gets you into trouble. Now, at the same time, you do have to look left. You'd be crazy not to. So that there's that fine distinction between, looking for and trade. And I think that's the thing, Rams, is you get that bias in your mind, and I'm only going to take a long here. I'm only going to take a short here. I'm only going to go and take the trade if it crosses this point. Last hour, the two of us were trading between two levels, and it was the type of thing where you can get yourself into trouble because there was one point where I went and took a long and didn't quite get down all the way to where I wanted to go and take it. But what happened was in that situation was I saw that the price had changed the other direction. We were just playing a range back and forth, and so what I saw on the chart was, hey, price has made its change to go back up to the top side of that range. Okay, let's go and get in. Whereas if I was looking for, I would be waiting all the way down to the bottom, and which it may or may not do. And maybe you miss out on a trade, or worse, well, I guess that is the worst thing in that situation. You just never get into the trade and you don't get the opportunity. But that's kind of the difference there. It's that, when you're looking for it, you got such a fixed mindset that what happens is you wind up missing things, and you don't trade just based on what you actually see. And that's his whole idea. I know they have all types of fancy definitions out there, and I'm a simple guy, but all these fancy definitions out there for price action and all this, and so I just look at the chart and see what I see. I see the price going up. I see that I'm at a key level. You know what? It's time to go. It's time to go long. Oh, okay. I've seen that the prices stop going up, and I'm now starting to see that prices starting to turn around. I get out. I don't. Excuse me. I don't need to go and look for all these different crazy indicators and crazy this and crazy that, because that, for me anyway, that'll get me into trouble. And I know there are lots of traders out there who make lots of money doing that, and that's fine for them, but it's just not fine for me.
Well, the other thing though, Walmal, you do look for something. You look for reasons not to enter a trade. So, for example, or to maybe get out quicker. So, for example, last hour when it crossed the double low, if you look to the left, there was a lot of rejection, and it stopped at 39.04.6 on our charts. And so it was like, you hey, look at that. Might not get any higher. Let me just take my pips off the table.
That's exactly right. I know you took advantage of that, and so did I. Excuse me. And so there may be a point where you're only getting 2 or 3 pips, maybe even 1 or 2 pips, on those trades, and that's okay. At the same time, I'm looking for an excuse to get out of a trade like that, but I'm in the trade until the trade stops going in my direction. And so what I mean by that is I got simple rules in place. So, for instance, price, let's say I'm in a long, I watch price until price stops. If price stops, in a trade like that anyway, if I see that price is not moving anymore, and I've sat there 5, 6, 7 seconds, you know how that happens sometimes where you're sitting there and it seems like an eternity for price to move, and it doesn't move. Well, here's the problem. I'm looking to get another 2, 3, 4 pips or whatever it may be, but I'm now at a point where I've got a 50-50 shot of whether it's going to go up or it's going to go down. I don't know which way it's going to go. I've got points, I've got points of pips, sitting on the table that I could take and put into my pocket. I'm just out, because that's just me, and that's just how I play it. Just get on out, and I don't care. Because I know a lot of folks will go and say you're crazy because, the whole thing, well, great, you put $200 in your pocket, you could have put $2,000 in your pocket. You're right. But at the same time, I'm also not taking a loss of $200 or $300 or $500 or even $1,000. And that's how I'm looking at it. I'm trying to preserve capital, and I'm watching the price action, and I'm just trading on what I see. I'm not trading on what I'm trying to look for, for the big move. And like I said, there's nothing wrong trying to trade for those big moves. It's just not my style. And we as traders have to come to a point where we recognize who we are as traders and understand that that's just, this may be what you do, it may not be what you do, and figure that out and trade what you see based on who you are.
Yeah, exactly. It's kind of interesting. We were talking about, or yesterday I was talking about the order block boys and girls and non-binaries out there. And I was saying how, right here I'm putting the cursor at 38.76.7. And that was the H1 lowest high at the time. And we saw price dipped all the way down into the 60 zone. And you said, hey, these order block guys are going to be starting to trade. So that's when I think I jumped in at 76 right at the edge and took it up for a few pips. And I think that's when I might have called out the 80 and the double low, even though I didn't stay in that long.
Yep. And that's exactly right.
Yeah. But see, the point being is I wasn't looking for that. I saw it. So it's like, oh, I see something, there's an opportunity, as opposed to, hey, I want to go long, let me find a reason to go long.
Exactly, and I think that's very, very important, and I know I've hit on this in the last couple of videos, and I hit on it again, and it's that whole idea of seat time again, because a lot of times, in the beginning, you're looking for trades. You're looking for a reason to take a trade. You're looking to go long. You're looking to go short. You're looking to do whatever you're going to do. Whereas I think that seat time is so invaluable, because what it does for you is that you can just look at the chart and you can see it. You say all the time that, you can look at the chart, and I know that a lot of times you don't have your 3LZZ on the chart, your 3LLZZ, I guess it is, but you don't have that on your chart, but you can just see it. And I know you say all the time, I can go and see the imbalance zones. I can see the order blocks without even having those indicators up on the screen.
Right.
And where does that come from? It doesn't come from anything. It's not an innate thing. It's more of something that you've trained yourself to do because you spent the seat time to go and do that. And what happens is you're able to see what price is doing. And because you're able to see what price is doing, I heard another video this weekend. I like the term, and it's got nothing to do with how he used it, but you have a bazooka in your hand now. And it's this idea that you've got a really, really massive weapon at your disposal, because you can just look at the chart and have a really good idea of what price is going to do. And I think that you're really good at pointing out those long-term places where trades are going to go. I'm pretty good at going in and figuring out what price is going to do over the short term. And that's the thing, and it's more of because I can see what price is right now, and I can see what price has done clearly over the last couple of candles or whatever, and I'm able to see pretty accurately what price is going to do on the next candle. Am I right all the time? Absolutely not. Nobody's right all the time, but I'm able to see that, and I think the whole idea here is that seat time trains you to do that. We're able to see price and know what it's likely to go and do. Whereas to look for, where that gets you into trouble, it's more of this idea of, okay, I got to find a trade. I got to find a trade. And you start building this up in yourself. And I know in the beginning, I used to do that all the time. Sit down at the chart. Okay, I sit down at the chart at 7 o'clock in the morning, and, okay, they tell me I can go and make all my money in the entire day in the first hour. Okay, where's that trade at? Let me find that trade. Look. Next thing you know, you've not even looked yourself into a trade that really doesn't even exist because you manufactured a trade on yourself. And that's where I think a lot of traders get into trouble.
Yeah, and the whole idea of looking for, as I mentioned earlier, is it's like putting the blinders on, because you don't see other things that then in hindsight you go, oh man, I missed it. No, you didn't really miss it. You weren't looking for it, and you didn't see it.
Yeah, exactly.
Because
times,
because see, missing something is you're looking for something and you don't see it. That's when you miss something. It's like if you're looking for an Easter egg and it was right there next to the rock and you were on the other side of the rock and you didn't look around. Yeah, you missed that one because you were looking for Easter eggs.
That's exactly right. It's funny, my grandson, who's 2.5 at this point, it is so funny that you say this Easter egg thing, because we did a little Easter egg hunt at our house and across the yard and everything, and hid these Easter eggs. And of course, he's only 2.5, so I hid 30 eggs in an area of probably 100 square feet, maybe 200 square feet, not a very, very big area. But of course, he was looking. He was so intense on looking, he was missing the ones that are literally right underneath his feet. Then he's out there 300, 400, 500 feet away from where the nearest egg was, because he was looking for that. He was so intense on finding. After he found the first one, he was going to find every egg out there. And the next thing you know, he's got his vision, so myopic, and he's just following his feet, as opposed to taking a step back and taking a look and seeing the yard for what it is. And if he would have done that, he would have seen, 10 eggs that were just not even hidden, just literally laying in the grass, And I think we as traders do the same thing.
Yeah. So one of the things is that like I have my price near indicator, because those are the things that I want to look for. At least I want to know, is price near the H4 pivot? Is it near the H1 pivot? Is it near the previous H1 low or previous H1 open? And those are the things that, if I were to put all these lines on the chart, it could get busy. And of course I could use my one indicator where the lines could pop on and off when they're near. But sometimes I like to have just a really clean chart, so I can, so that way, instead of the chart telling me what to look at, I just look at the chart, because every line is an attention grabber. And you know what, Walmal, like I said, we're going to probably have to do a part 2 on this because the fastest 15 minutes in trading is up. So, fellow traders, I don't know what you see and I don't know what you're looking for, but I do know it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.